Hello, everyone. Welcome to Oracle Live here with Vinny from Investment Club. Kind of a last minute decision to do this live stream, but Vinny and I haven't been on in a couple of weeks. So we've got to catch up. So we figured you guys can join along with us. Since we haven't talked in a while, we got the split that we've discussed. And actually, he and I were just discussing before we hopped on here. I just posted my most recent decade of splits video. So if you guys haven't checked that out, feel free to look over at the channel to check that out when we're done here. But discussing how many splits we could potentially see over the next decade, the ratios of them, and then comparing it to Apple and what they have done over the last 20 years. And I mean, it's nuts to think about the fact that we could potentially have, dividends rolling in thousands of dollars every quarter just from owning 100 shares right now.
Yeah, I think, if the story plays out the way we hope it continues to, no reason couldn't be within the next decade. I'd say 2030, 2032. If this all works out, they're going to have more money than they know what to do with. They'll have crested the hill, and would make the most sense to start doing a dividend.
Oh yeah, and it's funny because I was already having discussions with some people in the comments. The valuation gets super high, but you've got to include buybacks in that. And then do we even want them to do dividends? Would you rather them spend money on research and development and growing the company? And like you said, the free cash flow that I have projected for them is over $200 billion in free cash flow. I think that's plenty to do both. Now, buybacks are a little bit different because buybacks, you can kind of do them whenever you feel like it is once you open that door up, so you don't have to do them. Dividends, on the other hand, once you open up that dividend door, you're kind of stuck with it forever. We see all the negative repercussions on all the dividends that other companies do when they decide that it's not a good quarter, so we're not going to do dividends right now. We saw that going through COVID. So that door is a little bit different, but with that kind of money coming in, if that is what plays out, you've got plenty to do both, especially if Optimus is up and running at that point. Of course, who knows what they're going to want to do when they get to that point. We didn't even know Optimus was going to be a thing 5 years ago. So in 10 years from now, something new could be up. But yeah, I think they could totally do both.
Yeah, I'm of the camp that I think I would prefer dividends over buybacks, because I just think back to the companies that do these buybacks, like the airlines. They're buying their stocks when they're high, and then COVID happens and the valuation gets wiped out. Whereas there's something nice about the security that dividend brings. And like you said, buybacks are not really consistent. Where let's say the dividend, let's say they're paying out 10 billion and they're getting 100 billion of recurring revenue every year from the full self-driving robotaxi network. I feel like it does make more sense at that point, because they can do both. They can continue to grow and innovate, but they're just going to have more cash than they know what to do with. But let's see what happens.
Yeah, and that's really what it comes down to is, if they come up with new projects over that time frame, then I have no doubt that would be the place to put your money. Just like right now, talking about buybacks, dividends clearly out, not in the question right now. I don't think they would do dividends. Elon even said himself they're not going to. They've got so many things to work on: FSD, robotaxis, right, energy, Optimus.
And then when you look at it that way, that's kind of where I throw buybacks in that same bucket of there's better uses for the money. There's no reason to do them next 5 years, let's say, with all these projects.
I mean, heck, or maybe at that point we see where SpaceX is, and maybe he does do X.com holdings. And because you've got so much money, because right now you don't want to, because it would totally drag Tesla down and kill the company. But if you had SpaceX that was doing very well, which Ron Barron thinks that SpaceX could pass Tesla in the next couple of decades as the largest company. So if you end up putting those two together under the same umbrella, then you throw in Boring Company and Neuralink. And even if they aren't doing well, it doesn't matter, because the amount of money getting generated from the other two would totally hold those two up. So maybe that's the next route that Elon goes.
If SpaceX were to ever IPO, or more likely Starlink probably gets spun off in IPOs, it's going to be the hottest IPO of all time. But that could also be.
I was having a discussion with somebody else about how, maybe I buy into T-Mobile right now and then hold that until Starlink IPOs and then dump all of that money into the Starlink IPO.
Yeah, they're doing that was an interesting deal there, and it just goes to show you that neither company, SpaceX or Tesla, is down, and yet they're just going to keep expanding to every new vertical. This is just the beginning. I mean, and it's a great way that they're marketing it. Because obviously, if they try to go compete with Verizon, AT&T, it's going to be a regulatory nightmare. But how are they going? How's a regulatory agency say, we're going to ban you from giving service to dead zones that's going to save hundreds of thousands of lives, or if not more? So it's a very smart way to kind of get their foot in the door, I think, to this industry. And you're going to see that. I mean, what industry won't be better off in that like activity that Starlink could bring them?
Oh yeah, and then thinking about, I was discussing with somebody, like it's not that much of a leap in technology because the technology is basically the same, but realistically, it is like you're getting the technology of the cell service in areas that you can't get it because there's no towers. So now you're putting a tower in space. That is the leap in technology. So while, the quality of that technology isn't the best, the fact that you're going from a place where there's absolutely nothing to something is the big leap. And then, as somebody else had pointed out, what other vehicles are going to have this technology in them? In those markets, Tesla is going to stand out significantly because, now these people who are trying to, commute, drive around, and be mobile in those dead zones now have a way of actually communicating with the outside world through their vehicle. So just gives Tesla another leg up in those areas.
Yeah, the connectivity is definitely to the cars. And yeah, like you said, these are the innovations that they're not waiting for the competitors to catch up. They're constantly adding new features. And we just had the whole thing, the seatbelt and the airbag deployment it can prematurely detect a collision and, deploy it in such a way that it actually saves even more lives because it's safer instead of, now everything deployed, the airbags deploy impact. But these are the little things that are going to go a very long way. I mean, and again, when we get 10 years down the line and there are a lot of EVs to choose from, well, what's going to separate Tesla from the dinosaurs? I mean, GM and Ford, well, which car is the safe one? That's going to be a huge proponent of why people buy the vehicle. And Tesla is going to be the safest.
And I would imagine over time that will end up becoming a standard, very much like seatbelts and airbags. They're going to have these technologies be required by vehicles to have, but Tesla already being ahead of the game, thinking about them, they're going to continue to do that. So as everyone else has to comply and conform to it, Tesla's already working on the next thing.
And they have a requirement that the car drives itself autonomously because humans are sucky drivers, and who's going to have the best technology there?
Oh yeah, and of course, the Tesla Q, you can battle all day long. We are not there yet. You never know who it's going to be, but it sure looks like it's going to be Tesla. So
the fact that, to me, it's just you're seeing constant improvement. It's not something that's in the future. It's like from a year ago. I mean, it's probably magnitudes of better, and like just that pace to me, I think has to accelerate. It's not going to decelerate. But the fact that there's any progress, even it's incremental, is what keeps reassuring me.
Oh yeah, and I know last year, that was really the turning point where everybody was going. It's no longer if, it's now when. And every iteration that comes out for FSD along the way just tells us we are getting closer. So it's not a matter of if, it is definitely when. And when will it be? Will it be the end of this year? Will it be into next year? Tesla's already slated to get robotaxis on the road by 2024. So they're confident this will be done by then.
Yeah, that should be interesting. And then the other thing that blows my mind, I just made a video on this, is just Tesla's margins. They have perfected the auto industry. Even if we don't think about FSD, I was just like kind of charting it out based on Ron Barron was on CNBC recently, and he was saying how Tesla basically can invest $7 billion, build this gigafactory, right? One expense, and when it's fully ramped, or even just the point where it can make 1 million cars a year, Tesla sells these cars, average price of $50,000, and with that gross margin of 30%, they take home $15,000. So for every gigafactory, they put $7 billion in one time, and now they can build 1 million cars there. They can make 15 billion in revenue, and then you just multiply that out. What did they say at the annual shareholder meeting? They will get to 10 to 12 gigafactories is what they're looking at. We'll probably continue to add at least 1 or 2 a year here. So when you have 10 gigafactories that each are producing, on average 1 million cars each, we're talking now $150 billion of gross automotive margin. And what do they then do with all that money? They're going to pump it into all these other verticals that they're getting into.
Oh yeah, and thinking about so doing the math there, and correct me if I'm wrong if I misheard you. So basically, at 500,000 vehicles delivered out of a factory, they've basically covered the cost of the factory build.
Right. Yeah.
Okay.
Well, I don't know if it works out like that because of once they get to that economy of scale, but if they get to the point of 1 million cars, they're making double what they put in, and then that's annually.
Okay, so we could just play conservatively and say at 1 million vehicles delivered out of a factory, the factory is paid for, and everything on top of that is just gravy. So that's awesome. And we've already passed that with Shanghai. So Shanghai now is at straight profit coming out. Obviously, they've got their daily expenses and things, but as far as covering the expense of the build of the factory, that is now taken care of.
And then you got to think too, with Texas and Berlin, bigger, they're more efficient, and they're only building the Model Y, the highest margin of, well, at least compared to the Model 3, obviously the S and X are higher margin. But when you factor that in, the margin should only improve further.
Oh yeah, and I don't know if it was UBS or Jefferies who went over to Berlin. I know both did. I can't remember which one had said it, but one of them said the same thing, that the margins coming out of Berlin are actually going to be higher than in Shanghai because the vehicle mix that they're coming out of Berlin is a higher margin vehicle than out of Shanghai. So once they do get up to scale in Berlin, they're going to be more profitable because the costs are the same between the two factories. So I'm like, oh, and then Austin, we know is going to be the same thing. Who knows what the Cybertruck is going to end up coming out for profits? I'm assuming they're probably going to have margins somewhere around the Model X. That would be my guess. So they're probably going to have Model X type margins coming out of Austin. So that's going to be even higher. It's mind boggling, truly.
It is, yeah. And I wonder what the starting price ends up being, and for all the different tiers, the Cybertruck. Because at a minimum, I would have to think it's Model Y margins, which are exceptional. But it could even be even better than that.
Yes, so I initially figured Cybertruck would start off dual motor at 80,000, quad motor at 100, and Plaid at 120. But now looking at the EV tax credit with FSD pricing going up, I wonder if they're going to start the dual motor Cybertruck at 60,000 or 65,000, so somebody could tack on FSD and still get that EV tax credit on the dual motor Cybertruck. So that might end up being the most popular and highest selling truck that Tesla has, which then of course would compete directly with the F-150 Lightning, and then we'll see what happens from there.
And then to mention the semi-truck, which we'll probably get even sooner, and you would have to think, I'm sure a lot of that is the 40K subsidy you get from the EV rebate bill now. But you've got to also think that they're confident that's how confident they are in their supply chains and their battery materials, because obviously the semi-truck is going to need a lot of batteries. So even with this 40K subsidy, if they weren't very confident that they had, everything is kind of in order there would be no reason to do it. But they're probably thinking we actually can burst the market with this and do it with great margins, and it's not even going to impede on developing the Model 3 and Model Y. I mean, that's the supply chains that they must be working with.
Yeah, and knowing the 4680s didn't ramp how they wanted to, so we know that they kind of got pushed, but they obviously quickly reacted, which is how Tesla works. Hey, this isn't working right now. Let's adjust, fix it, makes things move forward. So they got the 2170s. So I'm curious, and I know that a lot of battery factories, Panasonic and everybody, they've been pumping out factories and saying the next 2 years. So by 2024, the batteries should not be an issue because most of these factories should be up and running to scale. And so then, I don't even know if anybody has determined how many batteries the Semi is going to require. And so between that and the Cybertruck, that's a lot of 4680s, because it is 4680s going into the Semi, right? Is that what they have determined?
I would assume, because they're going to be the standard.
So and I don't know. Obviously we'll find out more at the end of the year. I'm actually curious how many companies are going to push off their Semi deliveries until next year, because $40,000 is a lot. So even if you're, buying a small fleet, let's say it's only 12 Semi trucks, that's a significant chunk of change right there. So you're not going to want to overlook that. So either way, though, I think that plays right into Tesla's hand, seeing as, production is already tight as it is, especially with the 4680s, pushing it up to next year wouldn't be a bad thing. Let's jump into some questions here. Mark, will Tesla drop Monday? Don't know yet. Judging by the Jackson Hole Symposium and the hawkish stance and the fact that we were pretty significantly red on Friday, I think we're going to open up red again on Monday. How we're going to end the day, I don't know, but I have no doubt we're going to be opening red. And personally, looking at the patterns, we're still in the handle of the cup and handle. We're still consolidating, but I can anticipate a pullback. Judging by what we had seen from other examples, you can definitely get a pullback in the handle before a V bounce. So that is what I'm anticipating, is the pullback to fill that 247 gap and then bouncing up. 50, 21. You think your 50 shares would be worth 20 million? Yeah. Based on the numbers, and of course, now my predictions are 10 years down the road. Anything can happen over that time frame. A lot of different assumptions need to be made along that way, but it could totally be possible. If the company grows the way it does and splits the way I foresaw. Anything can happen along that way. Who knows? But that's what I'm seeing. Let's see. If they don't do dividends in 2032, what is the best tax-effective strategy for withdrawal for retirement? Well, Vin, I'll let
Buy
you
it
take
in
this.
your Roth IRA.
A Roth IRA, and I know, Roth IRA, is only going to work until, when you're 59 and a half. So that works. And somebody else was breaking down some numbers with a Roth and how you can actually lose money by having too much Tesla in your Roth IRA. But I know Vin already plays options, and anybody else who plays options now is great because being able to utilize the current shares and portfolio you have to play options as well, you can make some significant money on the premiums alone. So Vin, you could talk more about that because you already do it.
Yeah, I mean, there's a few options you can do. Obviously, a lot of people buy calls, but I prefer to kind of work more on the sell side. So if you want to try and wait for a better price to get into Tesla, let's say it's at what, 290 right now, you sell a put at 250 or 260 or whatever price you're comfortable buying in at. You get paid to wait, collect the premium in the meantime. And obviously, while there's no guarantee, it ever goes that low, you could miss out on upside, but you're getting paid. And if you're comfortable buying it at that price, then it's a win-win. And then you can also sell calls on your shares. But it's really tough with Tesla because it's so volatile. It has these freakish swings, just kind of out of the nowhere. We could rally 30%. It moves like wildly both directions. So it kind of makes it hard. But if it eventually less volatile, sell covered calls, and you could make really good premiums just kind of doing that weekly, monthly, what have you.
Yeah, and that's for me, from what I had learned from the options, is selling puts is the way I want to go, just for that reason. And you hedge it, so I've always got my main portfolio, so I've got the shares that I'm building up, and I'll keep money on the side to buy in case it doesn't get to the levels that my options are in there for. But just being able to get paid to wait, so this way, you're selling your puts. If you don't trigger, that's fine. You still have shares that run, and that's of course the biggest downside risk of selling puts is if the stock runs, you miss out on the gains. But you still get a premium on it, and if you still own shares currently, you're still going to get some of that run, just not as much because your put didn't go through. So it's, to me, as long as you're wise with it, it's a win-win. Let's see. Dividends would be nice. Having enough discussions about it is, a lot of times when a company decides to do dividends, it's because they have not seen any more growth coming, at least not a strong growth. So, I mean, you look at like an Apple, they're doing dividends and clearly they're growing, but they're not growing like Tesla's growing right now. So, it's how much do they have to invest in? But as Vin and I were talking about, if you've got that much free cash flow coming in, you could probably get away with doing both. You can still grow at a rapid 30% rate and pay out dividends at the same time. Because I don't know what else you would do with your money. I mean,
Yeah,
there's only so many
Elon.
buybacks you can do. There's only so much you can invest in. What do you just do? Sit on a mountain of cash?
Elon kind of said it best. Dividends are started when a company has crested the hill, so to speak. And yeah, like you mentioned, Apple's a perfect example. They're still growing. They're going to be a phenomenal company around for a long time. But yeah, are they growing 50% a year? Not anymore. So there just comes a point. Obviously, Tesla's not there yet where you kind of run out of things to either put the money into, or you just have so much coming in more than what to do with, which I think that's the scenario if FSD and the Tesla bot work out, that Tesla's going to be in maybe in another decade. But until that point, if you have initiatives you can invest into and continue to grow this company at such an exponential rate, then yeah, dividends don't make sense yet.
Oh yeah, and of course we're still waiting on Master Plan Part 3, where that's going to be talking about scaling to extreme size, and that's going to be the big one. So I think at that point we'll have kind of a better idea of the timeline that Elon is looking for when it comes to because right now we only have a timeline of Elon's thinking basically through 2030. We haven't really learned anything beyond that when it comes to Tesla or any other growth. So I think his Master Plan Part 3 is really going to open up our eyes to what the further future plan is for him and the company. Let's see. Let's see here. Saw you earlier. Do you think your Tesla price target of 4,300 for 2032 after force? I do. So for me, and I did the math on it many times over the course of this week. And when you're playing in buybacks, that's the only way it would happen. Because otherwise, if you don't have buybacks, then you're working out to be like a $200 trillion company. Totally. I mean, maybe Warren Redlick or Stephen Mark Ryan believe that's possible. But by 2032, that would be unrealistic. So in order to get to that price target, you need to have the buybacks because that adjusts the supply and demand of the shares that are out there. That is the only way you would be able to get to my counts with the price target that I have. And that would equate to about an $11 trillion market cap in 2032. So yes, Cillian, that is how it plays out. But again, a lot of heavy buybacks would be required in that time frame to hit that. Let me see. Hey, Kairov. So Kairov just informed me, and I'm trying to help him get squared away. I don't know if it's going to work. Kid's got a great positive attitude, but there's another Twitter user out there, Tesla AI bot, who flagged him as a fake account. And so I've already reached out to the guy and said, hey, by the way, he's not a fake account. He's a kid. He's working his butt off trying to get us accurate forecasts for production and delivery numbers. So I have yet to get a response from him. But Kairov with a great positive attitude saying, you know what, I don't mind starting over. He just started. He'll do it. This way he doesn't have to worry about Tesla Q and all the negative stuff that he's had to deal with before. And he can kind of start off fresh. So Kairov, whichever way you go, we are supporting you 100% on this. And as soon as you come back on, if you do change the name, just let me know and we'll promote you back up there again. Just think, because like we're all in the same community and then something like that happens. So I'm hoping that we can get it squared away, but we'll see. Let's see. Mention 4 stocks plus the second show the price. So my price target would still be at the time of that last split would be $1,000, which would bring it down to 333. I think they're going to cycle through and kind of do the same pattern where the stock will run up to about $1,000. Split down to about $300. They'll do some buybacks, which will then push the stock price up again. And buybacks don't have to be done all at once. So like Apple and many other companies will just say, hey, you know what, we're deciding to do some more buybacks at this time because it's open. They don't have to do it at specific times. They can do it whenever. And so I think what's going to happen is it'll split. They'll do buybacks over the next 2-year time frame, which will then bring the stock price up because the amount of shares, the supply of shares that are out there comes down. That just mathematically means that each share is going to be worth more. So I have not done the math. So if anybody wants to do the math on it, I have not had a chance to do it. What dollar amount they would actually have to buy back in order to get the price targets to work out. I just did not have time to do all of that math this week. So hopefully that does play out and still works in my favor, depending on how much they have for free cash flow and how much they want to buy for buybacks. But seeing as we're potentially looking at $130 billion in free cash flow by 2028 and another $200 billion in cash flow for 2030, I think there's plenty of money to be able to buy back in order to bring the stock price between $300 and $1,000 every time. Let's see. That's all the questions here. What else we got going on this week? So we've got, the stock price, I'm guessing, is going to come down. So let me know in the comments below, guys, how much you guys are going to be buying when we come down to fill that 247 gap. Not financial advice, not guaranteed it's going to happen. But I know I'm sitting on 10% cash, and I plan on deploying half of that as soon as we get down to fill that gap. So I don't know what you're looking at. So Vin, how many Teslas have you seen lately? I was over in San Diego doing the game that you play where, every Tesla you see, you put in money. I was like, this ain't going to happen in San Diego. I was like,
yeah, that would get expensive quick.
Yeah.
I've definitely been seeing a lot, and I think I owe for about like 75 still. So I'm averaging in over time. For the people who don't know, I've been buying Tesla since 2019, and now my little system is evolved into every Tesla I see on the road, I'll put $10 in stock. So 75. So that gives you an idea of how many Teslas I'm seeing around these days. It's definitely, it's crazy to me. And like a lot of people just like from all over the US have been saying the same thing, that they're kind of just year over year, they notice like an exponential increase in how many Teslas are on the road.
Yeah, it's like playing a very lucrative game of punch buggy. but now it's costing way too much money just because
Yeah.
there's so many of them.
But you know what? I keep telling myself I'm happy I did it in 2030. So
Oh
try to
yeah.
stick with it for now. I don't know. At this rate, though, I'm going to have to cut the game soon.
And I even saw with my kid last week, we saw a couple of Rivians on the road here in Connecticut, which is the first two that I had seen. Nice looking truck, and I've heard very good things about it. Obviously, companies early on stages, not profitable at all, huge expenses. So I think they're going to be fine. I think that they just need to keep doing what they're doing. And if they keep on doing it, I think they'll be very similar to Tesla. It may not take 10 years to get where Tesla is, but as long as they survive, I think they're going to do fine. And quite honestly, like we've said before, any company who is out there trying to push the EV revolution is going to help Tesla, in the near term anyway. So competition isn't a bad thing. Competition is actually a good thing for Tesla, especially like Mary Barra, on her interview yesterday, with Fox News, saying that stuttering through her explanation of how they are going to reach Tesla in North America by producing 1 million vehicles, and they go, so in 2025, you're going to produce and deliver as many as Tesla delivers in 2022. That's awesome. That's the way to lead.
Congrats, Mary. You led. Yeah, it's funny. Their 2025 is coming up quick. At the current pace, we're not quite getting there at GM. But go back to Rivian. Yeah, I think that they'll carve out a niche eventually. There's definitely an appeal there, and at the right valuation, it could make sense. But Tesla's the 0 to 1 company, and now you've just got a lot of copycats that like it's only going to get you so far. And yeah, they'll do fine. I'm sure they could secure that niche, like I said. But I just don't see I can't get excited about it like for Tesla. It's just completely different.
Yeah. I mean, like Ford. I don't want to say I'm excited for Ford, but like I'm kind of a fan of Jim Farley, so I'm like, all right, that's cool. It seems like Elon is okay with him. It's like him and Herbert Diess, are kind of like, all right, we're doing well. Let's keep this thing going. It's kind of a friendly competition thing. Really curious what's going to happen with VW now that Diess is gone. But
I was going to say they let him go, so yeah, that's interesting. I'm sure he probably. Do you know like exactly what happened? Like I'm sure he ruffled a lot of feathers. Praising Elon Musk. Probably hated that him saying we need to be more like Tesla, but it was right.
Yeah, well, actually, from what I have heard, it comes down to, I guess he was kind of against, I guess, spoke negatively about the software when it comes to what they were using and all the software issues that they were having. So the Porsche family was not a fan of that. And so he has kind of been asked to step down. And from what I've heard and from everything I had read, this happened to someone else back in, I think, 2009. And that person still stayed on their position for however long it was, because Diess is done at the end of this month. But then until the end of their contract, which Diess is in contract until 2025, they actually stayed on with the company and then retired thereafter. And Diess, I know, is getting close to his retirement age anyway, so he may stand with the company and basically just be their bitch and do whatever they want, because that's kind of what the other guy did. So I don't know.
In 2009, the guy tried to raise some red flags about the emissions. But
then Dieselgate.
Tesla should hire Diess.
Yes, I agree, and I don't know if even if he came on as a board member, it may not be bad.
Yeah, I mean, he could definitely bring a lot of experience. I'm sure there would be benefit, and he's got a good relationship with Elon Musk. That would be interesting.
Yeah. Oh, and here's another one from Richard too. That's another good point too. Is cut the unionized workforce, and that's it too. And it's not it's not like you're against unions. It's not all unions are looking out for the best of the employee. I think that is the intention for the most part, and that's why unions were created. And I'm not against unions at all. I think they have a very good place in our work environment. But I have known unions well enough to know that unions are also a business. They are a for-profit business. They need to make money themselves, and so some of them are out there. And I think the UAW is a big one where they're just looking to make as much profit as they can. And looking at the workplace conditions and the pay that comes out of Tesla and GM. There's a lot of arguments out there, but Tesla pays their employees better than GM does. And those employees do not have to pay union dues, and that's a huge beef that I've heard from people who are in unions, don't get what they feel is fair treatment, is they're paying for union dues and they're not getting anything for it. And
the UAW doesn't care about electrification or EVs. The UAW cares about the UAW.
Yes.
And this is the problem, Ford and GM, it's I think going to be a monumentous problem that alone could be what prevents them from becoming what they could be, some that survives, because just that alone, like you said, Dees tried to bring it up in Europe. If you even thought it in the US, they would be firing that CEO, so that is really a huge hurdle. And like, I don't think it'll really truly, like, we'll see how slow they are to innovate, how slow we are to make this transition to EVs when it comes to GM. And I mean, Ford's doing a little better, but GM, let's go with, that's could be what determines the fate of the company.
Yeah, and realistically, I mean, the UAW is the corruption crutch that is keeping GM up. And if the UAW wasn't there, they probably wouldn't get any of these secret bailouts when it comes to the EV tax credit and what was the battery one that they got the funding for their battery factory. It's like, if it weren't for the fact that the UAW was there, all deep into the pockets of the government, then we wouldn't have GM surviving right now. They're getting their secret bailouts. It drives me nuts, but I don't think that they're going to. I don't think they're going to make it. I don't think, even with all of these secret bailouts, they don't have a chance. Let me see. Yeah, and that's true. Yes, that's exactly true. So I think, like, we have electricians unions, plumbers unions, things like that when it comes to trades. Very, very handy to have, because it helps these guys find work. It helps them be employed and build their businesses up. So I think those unions are very good. And there are some others that I think are very strong and good to have. But some, like the UAW, they run their course. You think about the fact that when unions were created, it was trying to get equal, good, safe working places for people, for the worker, just like you said. For employees, they need bargaining power. But then over the course of time, laws came into place to do what the unions were doing. So now you have laws that are doing what the unions were trying to do. So what do the unions do? The unions have no place anymore other than trying to make money. So, it's very corrupt in some aspects. Let me see here. Kairov. So already a new account. So Tesla Kairov. For all of you guys, hop on over to Twitter, get yourself set up, Tesla Kairov. I will be changing my description because I have his link in there. So I'll be promoting it from there. So thank you, Kairov. That's awesome.
I'll follow you after this.
Let me see. Let's see. Here in the Netherlands, I start to see more and more Model Ys. That's awesome. Yeah, and I know, with Berlin popping up, and Kairov has been pointing out that in I can't remember where he said it was, but they're already looking at VIN numbers, in the 14, 15,000s, and we're already seeing some VIN numbers in the 20,000s being assigned, which is awesome coming out of Berlin. So that's a huge jump, and that's a good way for us to be able to track what production numbers and the ramp rate looks like.
Just think about what that's going to do for delivery numbers, obviously, in addition to having 2 bonus factories, but all the time spent shipping now that they won't need to. Berlin's got Europe covered for the most part, maybe some from China, but the US doesn't have to ship out to Europe anymore. I mean, this will add more profits. This will add, a quicker ramp. I mean, they're going to hit that percent number.
Well, and that's going to be the huge one, is when Berlin actually gets up to ramp pace. When they're putting out, their goal by the end of the year is 5,000 to 10,000 vehicles per week. So even if they're at the low end at 5,000 per week, that's a significant chunk of vehicles that Shanghai no longer has to ship. Because right now we know that Shanghai usually does, exports for the first half of the quarter, and then mostly imports for the second half of the quarter. So that's why numbers are always thrown off, and that's why we see Tesla Q and the bears coming out in the first half of the quarter. Tesla's numbers are down. It's like, dude, every single quarter, you know how it works. So it'll be nice to be able to smooth that out and not have to deal with that, because Shanghai doesn't have to export as many vehicles. Obviously, if demand keeps going up as it is, they're still going to have to export.
I'm sure there'll be some, but at least it'll alleviate it to an extent.
Let me see. Closing gap, 2% loss of 120 billion. It's true, but realistically, like, we haven't seen it before. I mean, Tesla went from 1.2 trillion in market cap down to 600 billion. So it happens. So not to say it can't. And not only that, but even looking back to the first split that they had in 2020, the stock ran up 81%, pulled back 33% of those gains, and then ran to all-time highs afterwards. So totally possible. Let's see here. The UAW will not allow employees to produce cars as fast as Tesla. Tesla Gigafactories just produce cars faster. I didn't even think about that aspect either, is, with the UAW, because when you have employees who just bitch and moan, and not to say that they all do, and I'm sure there's plenty of awesome employees out there working for these factories and companies, but Tesla just basically gives free rein to their employees that says, look, if you guys can do this more efficiently, if you guys think that you can come up with an idea to help us produce faster and and more cost-effective ways, then do it. Let us know. Show us. The UAW and all of the legacy automotive makers do not have that culture in their factories. They don't operate that way. They're out there and just like, all right, this is what we're supposed to do. Let's do it. And that's it. There's not as much leeway. It's not as much free reign. I mean, think about the fact that engineers can go back and forth from SpaceX to Tesla is like, hey, you guys are burning out with us here. Go over there. Get yourself a fresh mindset. Go over there. Help them out. Come on back over here. Tell me what other workplace does stuff like that.
Yeah, I mean, just think about that. That's what they say. It's the most empowering system to work under. You don't really have to answer to a boss. Everyone's basically compensated the same. You're making all your money with stock options, and so it's in your best interest to do your best to problem solve and make the company run as efficiently as possible. What other company can say that?
Yeah. Hey, David. You are welcome, sir. You are very welcome. And yeah, it's funny because I know I went up to, for my company, we work with a lot of different vendors. One of our vendors is Ferris Motors, Ferris Mowers, and they work for Briggs and Stratton. They're owned by Briggs and Stratton. And we went to their factory, and the factory is very clean, very well run. And they have an employee stock purchase plan, but everybody is in it. It's very much like Tesla, where every employee gets benefited by how well the company does. And so the better the company does, the better everybody can do. So it entices and incentivizes everybody to do better. Can you be more efficient? Can we be cleaner? Can we work safer? Can we work smarter? When you have that entire culture built in, it's going to create a very good product for a very low cost. And that is what they do. And that's exactly what Tesla does, just on a mass scale. And when you provide those things, right now I'm kind of at a point with my job where I'm not incentivized to do anything other than the bare minimum. And it drives me nuts because my work ethic is to bust my butt. I'm up at 3:30 in the morning to do stuff for the channel. I go to work at 6 a.m. I get home at 5:15. I then work on the channel again, and I go to bed at 8:30 and then start over and do it again the next morning. I have a strong work ethic, I believe. And when I'm working for a company who doesn't incentivize a hard work ethic, and I'm just like, well, why am I putting in extra effort? I used to stay late. I used to come in early. And I'm like, but why bother? Why am I doing that when I can spend that time trying to produce better quality content for you guys, and you guys give me way better feedback than my job does? So of course I'm going to keep coming to you guys because you guys are awesome, and my job just doesn't give me any of that. And so when you have a company who is going to give their employees what you guys provide to me, which is that awesome feedback, and it makes perfect sense for the company to do well.
Sounds like you should apply for Tesla.
Actually, it was funny because Dr. Jack and I were talking about that, wondering if, just to go work for the factory and be like, I wonder what it would be like, and I know it's hard. I know it's not going to be easy. So anybody who works for Tesla in the factories, please let me know what it's like for you guys in there, because I know the engineers have it tough. There's a lot of burnout because they work at a very high pace. So I totally get it there. It's not for the faint of heart to even work there, let alone be an investor. But I have thought about it. I was like, you know what? Maybe when my kid graduates, I'll go work for Tesla for a couple of years and see how it goes.
Yeah, I feel like there's no denying it's really hard, but I feel like it's something rewarding, even if you do for like a year or two or something.
Oh yeah. And thinking about just the employee stock purchase plan alone, they're getting paid, better than GM, from what I hear is one of the best pays in the automotive industry. So they get paid well. They have the employee stock purchase plan, which is you're getting shares of a stock that is going to do well in the future. You're working for a company who has an awesome mission, trying to change the world to renewable, sustainable energy. It's, there's a lot of good reasons to work there. I see. That is why Berlin margins will be crazy as China transport costs. Yeah, that's another one too. Now, when you take the transport costs out, when Berlin starts to, produce all the vehicles that they need for the continent, then China doesn't have to pay for as much transport costs. So that is a big savings there as well. So just think about all these little pieces of cost savings that Tesla is going to have over the next decade from building new factories in logical places. So when it comes to logistics, there's a lot less shipping costs going on, more massive profits. Richard, I am in Connecticut, Norwich, by the casinos.
I'm in New York.
Yeah, so Vinny and I, was funny because he reached out to me early on, and we didn't realize how close we lived to each other. So we haven't hung out yet, but we will. We'll get there.
We'll do a live
we'll do a live
Oracle
stream
investment club in person. Yeah.
Yes. Let me see. Will Musk reinvent the Tesla in Tesla if Twitter deal is not done? Yes. So he said he would. So he would reinvest in Tesla if Twitter deal is not done. So I have a feeling that, you know, Gary Black and Dan Ives are correct. They'll renegotiate down to a lower price for the deal. I've been tracking Elon's personal sales of any stock, and he has not sold Twitter, so he still holds it. I'm sure he's still holding it because he does not know how this whole court case is going to play out. And I think for me, obviously I don't know Elon, but you know, he and I hang out every once in a while, but no, not knowing Elon, but knowing it seems like buying Twitter is broken, but I think it might be easier because it already has the user base that it does, might be easier to take a broken Twitter and fix it because of the user base that's there, then create your own and try to build up a user base. I mean, thinking about just the Tesla community alone, guys like, you know, Whole Mars and Sawyer, you know, people who have been over there for years, trying to convert everything that they have built on Twitter over to a new platform. Not to say they won't do it, and they're going to obviously get a huge following. I think people will convert immediately. It's not like they're going to change who they are. But I think, you know, and I don't know if that's factored into Elon's thoughts at all either with all of that. But I think at this point, it's looking like, knowing how Delaware works, they're probably going to end up forcing Elon to buy it, but hopefully they'll negotiate to a lower price. And if they do, Elon will have money left over. And I don't know if he'll reinvest into Tesla with the money left over, or if he's only going to do it if the Twitter deal does not go through. But he did say that if it doesn't go through, he will reinvest, which that could be another massive bump to the stock price if that happens in October, because that court date is October 17th. Let's see. I'm seeing more secondhand Teslas coming up for sale. Does FSD go with the car or stay with the previous owner of the car? Stays with the car. That does not go with the owner. That's actually one of the beefs that some people had talked about, is the fact that it doesn't stay with the owner. It stays with the vehicle, because it's like, hey, I already paid for FSD. I want to buy a new vehicle. So shouldn't I have the FSD go along with it? And it does not. It stays with the vehicle. So that is actually something that one of my buddies is doing. He has 2 Teslas already, 2 Model Ys, one for him and one for his wife. And he already has another one that's coming. And the point is to take the new one for himself and then sell the old one, and sell it because he has FSD beta in it. So he is actually a beta user, and he can actually sell that for more because the cost of the vehicle has gone up, not just because of the resale value, because it's a Tesla, but also because the price of FSD has gone up. So whereas he got FSD for, I think it was under $10,000 for him, now he can sell it for a product that's $15,000. So get $6,000 more for his vehicle just because of FSD. So it does increase the resale value of the Teslas because it does stay with the vehicle. And yes, Jerry, thank you. You answered that as well. Let's see. Video this morning, was that your bullish case? Actually, that is my Kevin. That is my base case. That is my base case scenario with that, which is hilarious because this is the awesome dichotomy of the Tesla community. Is some people think that I am too conservative while others think I'm way too bullish. So the fact that we have this super wide range of what everybody's thoughts are, you know, you're looking at a Warren Redlick and Stephen Mark Ryan saying we're going to be looking at 20 and $30 trillion market caps in the next 15, 20 years. And then you got people who are, you know, like the Gary Black side of things, who's still a Tesla bull, but he's looking at more like, you know, a $4 to $5 trillion market cap over that same time frame. So, you know, either way, awesome growth. Even on the most bearish bull sides of things, I have seen some awesome growth coming out. Sean, oh, you look for power distributors? I deal with them all the time. Where do you work for them? Because maybe I've actually dealt with you at some point over my career, because I deal with them, Briggs, Ferris, all of them. That's awesome. Let's see. Where in California is that? I know California is a massive state, because I know San Diego. I just visited there. My family's down in San Diego. One of my coworkers who just left our company, he was from upstate California, near the Redwoods. So I definitely want to get out and visit the Redwoods. I have not been there yet. my plan is when I get my cyber van, I will be traveling the country and all of North America to visit all of you guys and do live streams at awesome scenic locations. Let's see what else we have going on for this week. So Catalyst coming up. Vin, when do you think that we are going to see this investment grade rating coming up?
That is the question. I mean, it would definitely help a lot because I was just listening. I forget if it was you and Dr. Jack or Steve McGrine. Somebody was just talking about how like there's a lot of companies out there that probably would, like funds that would buy Tesla shares that can't because it still has that junk rating. So, I mean, I would hope it would have to be soon, but who knows with them getting kicked out of the S&P sustainability, these things don't exactly operate efficiently.
Yeah. Oh my goodness. And not only that, but it's like, it drives me crazy how you look at the actual numbers and reasons why people have investment grade rating, and Tesla is better than most of them, especially legacy auto. They have better numbers than all of them, but they're not in it. So it's like, is this even legit? Like, I don't know. But yeah, and I know Dr. Jack and I were talking about it, and that's coming up, and there's a lot, and I can't remember. I don't know what the latest numbers are. Last I saw from Gary Black is 55% of Tesla is institutionally owned. So there's a huge room for a lot more institutions to get in. And I think it was Dr. Jack who had mentioned it. Out of like the 200 plus funds that are out there, only like 40 something of which are actually invested in Tesla. So it's going to be a massive run. And my dad was explaining how sometimes when that happens, it actually mutes the stock price because they kind of, dictate where that price is going to be. Because right now the stock price keeps running because retail investors keep running it up because we see what the future is going to bring. But even if institutions bring that stock price down, it's at that point going to be basically how I run my valuation model, which is based off of fundamentals. So if the fundamentals keep growing, their numbers are just going to be plugged in based off of what the fundamentals and the earnings are. And if Tesla comes through with those earnings, the stock price is just going to go up accordingly. That's it.
Right. Yeah. Yeah. The institution, could also, may not be a good thing, but long term, I mean, the numbers will speak for themselves. Doesn't really matter.
Oh, yeah. Let's see. Thank you, Angus. I appreciate that. Jerry, Tim, and Vinny, when will you all factor in other products such as energy, insurance, Cybertruck, semi into your price targets? For me, I'm conservative. So I'm a see it when I believe it when I see it kind of guy. So I believe that these things are going to come to fruition. I know there's a lot of other models that are out there that use numbers, based off of a lot of different factors as far as what they think that these things are going to bring in for revenue generation. But I don't want to play games of what I think. That's just too many variables for me. So for me, I base mine off of numbers that I currently know, which is EVs, a little bit of energy because we know that money's coming in from that. We don't know how much money is coming in from insurance currently, so I don't factor that in. So once we get concrete numbers from that, I will adjust my valuation model to include those specific numbers. Otherwise, the way I run mine is I take my PE ratio and I tweak that a little bit because that changes the price target a lot on a stock and evaluation model. So I'll tweak that based upon the timing of when I think that these things are going to come to fruition and actually make a difference to the bottom line.
Yeah, I would agree with going conservative on it. And that's why I just keep going back to this model. If we project out, if Tesla sells 10 million vehicles in 2030, that's half their goal. That would give them between 10 and 15% of the global auto market. 10 million vehicles, 10 gigafactories, we're talking 150 billion of gross profit. So that alone, you can see where the growth is going to come from, obviously. And then, I think these other things, insurance, we're seeing it is getting rolled out to more and more states. I feel like every month I'm seeing a couple new ones on the list. I think that'll be huge. But until these things are out, and it's very hard to project that for now. So that's why I just stick to the cars. We know they're good at that. They're going to grow that 50% a year, get to hopefully at least 10 million by 2030. And things are looking pretty good.
Yeah, and I look at, Elon said their goal is to get to he's like, I think we can get to over 40% gross margins, for vehicles. And so that's basically how my numbers run. So by 2030, I've hit 19.5 million vehicles delivered with margins, I think it's at 39%. So, even going conservative based off of Elon's projections, those are the numbers that I'm running. So straight off of what Elon said. And so far his numbers have all come to fruition along the way, even with all the hiccups that we've had over the last 2 years from COVID. So based on all that, once we get new concrete numbers, like when the Cybertruck gets released next year, and we can actually see, all right, well, how is that affecting vehicle margin percentage? All right, now I can tweak my vehicle margin percentage. If that comes in at higher numbers and say, hey, we're getting, a 45% margin on the Cybertruck, oh, that's awesome. Now I can bump those numbers up, and that'll change my whole valuation model through the next 10 years. So once we get the concrete numbers for that, I'll adjust mine accordingly. But otherwise, it's just, throwing out rough numbers and justifying all those rough numbers that may or may not actually happen. Plus, another thought you have is, well, if we have all these robo-taxis on the road coming up in the future, how much revenue is going to come from FSD? Is FSD going to be in every single vehicle? Is FSD only going to be for robo-taxi fleets? How is that going to work? Are they going to have different level of packages? Is there going to be an FSD package that, comes standard with a vehicle because it's strictly for safety purposes and it's going to help save lives, but it's not going to be true autonomy? How is all that going to get factored in? I think there's a lot of that's got to be answered over the next decade before I can truly put in true numbers to this.
Tim, what do you think about, we were kind of talking a little bit on Twitter about, what do you think, what share of the global EV market are we going to end up with here? Tesla, I know you think them and China will be the top two. And then if we look at, the smartphone market, you basically have Apple and Samsung are number 1 and 2 with around 27 and 26%. And then everyone else, the next runner up only has 10%. And then it's a far drop off. So Apple and Samsung dominate that industry. What do you think?
I think that's going to end up playing out the same way. So I think what's going to end up happening is just that. But I think instead of it being Samsung, it's going to be China. And it's going to be a lump sum of the Chinese automotive makers, which together collectively, they may actually have more of the market than Tesla does. But that's going to be a fraction because it's all broken up into all the different companies. Out of all of them, BYD already has a massive lead over everybody. So I think BYD will be one of the major players there because similar to legacy auto, they still have to make that conversion over. So they still have that challenge to face, but they are still so far ahead of everybody else because they don't have like GM and Ford have Tesla that's already leading the way. BYD is leading the way. They don't, Neo, XPeng, Li Auto, those companies are doing very well, but they're still so far behind BYD. But collectively, I think they're going to be great. And I think as soon as they start pushing over to the US and other countries, which I know they're already getting their toes dipped into those areas, I think they're going to do well. And then after that, I think Ford is going to keep doing what they're doing. I think they're going to have their niche market, and I think they're going to be strong with that, and they're going to be fine. And then it's whoever survives. VW, I think, is going to be in trouble because they lost Deese, and I don't think they're really pushing for EVs as they say. And Toyota may or may not. They might, just because their brand name is as good as it is, might actually do okay if they convert quicker. But I think they're going to be in the same boat as a lot of legacy auto as well.
Yeah, that would make sense. And, if Tesla did hit that number, we're talking around 25%, that would give them that 20 million target. That's what they want to do a year, is 20 million. So it is nice to know that I think anything over 10 million is going to be great. And so you kind of have a margin of error there. So
yeah, and that thing I look at too is what size is the global automotive market going to be then? So right now, I think we're at like 70 million vehicles sold annually, normally before we hit COVID when nobody could produce vehicles. So looking at 2030, let's say we're pushing 100 million vehicles out, and if Tesla has 15 to 20% of that market, that's 15 to 20 million vehicles that are coming out from Tesla alone, which is what their goal is. So hitting that mark, I think, is totally realistic. I think the question at that point really comes down to, is something I've been trying to play in my brain, is if robo-taxis truly become, a more efficient and cost-effective way to travel, does that mean that global automotive sales are actually going to come down because more people are either ride sharing or using robo-taxis? So that to me is kind of a big variable at the end of the decade. But I think at that point, it's really going to break down for Tesla as, where's the revenue coming from? Is the revenue coming from EV sales or from software and FSD revenue and robo-taxis? So I think they win either way. It's just one is actually going to be more profitable than the other. EVs will be a profit of 35 to 40%. Robo-taxi revenue is going to be a profit of 80%. So, I mean, you can't really lose.
Definitely, whether the auto market contracts or expands all comes down to the success of the robo-taxis. That's 100% true. And yeah, you would hope that Tesla's kind of leading in both those fronts. But other than the cars, yeah, we're probably going to start to see more and more software revenue. So yeah, they only need one of these paths to really hit the home run on.
Oh yeah. And that doesn't even include energy or AI. I mean, you start factoring in energy and AI. And if Dave Lee is right with his assumptions, which I agree with those S curves, energy and AI can take off and you can completely lose your EV market and it won't even matter. You won't even notice.
Yeah.
Let me see. When do you think the first big car company will go bankrupt? I'm looking at 2025. 2025 to me is going to be the big year for a lot of things. And I think 2025, we will have the writing on the wall as far as who is going to make it and who is not.
It all depends on how many bailouts we're going to give, whether they're official or not. I mean, 2035, gas cars starting to get banned, probably around then, I would say.
Yeah, I totally agree. I mean, and we're already looking at California is banning them by 2035. New York, and I can't remember what the other state is. I think it was New York and New Jersey also agreed on the same thing, 2035. ICE vehicles will be banned. And I can see that happening all over the country. I don't know if we're going to go nationally to banning vehicles like that. I'm sure there's going to be plenty of states who are not going to ban them, and just to be forward here, I'm not all about banning ICE vehicles. I think people should have their choice, very much like a lot of other things that we deal with here in this country is educate people on both options and let people make their own choice, but give them true education as to what the benefits are of each option. And that's really what it should come down to.
Yeah, I don't think you don't need to ban them. And that's why even the EV tax credit is silly, because it's just going to be a superior product and a gas car will be like driving around a horse and buggy. So yeah, there's definitely no need to ban it because probably by then anyway, the EVs will just be so far superior. Economically, it just wouldn't make any sense to buy a gas car. Right. But yeah, I'm sure they'll stick around for, it'll be a small enough chunk by that point for sentimental value and whatnot. But
oh yeah. Yeah, and I agree. I mean, it's a no-brainer where you're going out to buy a vehicle. You're like, well, I can buy this EV for less money. That's actually going to cost me less to actually own and operate than this ICE vehicle, which requires a lot more maintenance. And even if you take out, whether it's a dirtier car or not, just the cost of what you're going to be paying for the quality of the vehicle is going to just naturally push ICE vehicles off. All right. Kairov is up and running. We'll get you on that. We'll get you back because it was so funny because he just hit 600. Like he actually passed me. You passed me in followers over on Twitter. And so we'll get you back there. We're going to get you to 1,000 in no time. All right. I don't know if we have anything else. I think we've been on for an hour. I think we're good. Thank you guys for being on. I know this is a last minute moment to come on the live stream. It was awesome though. We just had this chance. So thank you guys for being on here. If you guys don't follow Vin, check out his channel, Investment Club. I will go into the description down below and check out, put his link in there. Follow him over on Twitter. One last question. We'll do this and then we're done. Watch your dividend video. I had never even considered that factor. I should live off that 10 years alone without touching shares. Mind blowing. Thank you so much. Thank you. Yes. It was crazy over the whole course of the week. I'm like, is that real? Like, is that legit? And if it plays out, I think it's legit. Again, a lot of assumptions went into that. So a lot of things do need to come to fruition to make that all happen. But I do think it could actually happen. So great note to end that on. Thank you guys so much for being here. We will see you all later. Thank you, Vin, and we'll talk later.
Thanks, guys.